Welcome to HDFC Securities 5-minute market wrap-up, your weekly recap of all the key events in the equity markets. In key macroeconomic news, US Federal Reserve left its benchmark rates unchanged. The Fed's policymakers also projected 3 rate cuts in calendar year 2024, 4 rate cuts in calendar year 2025, and a further 3 cuts in calendar year 2026. US CPI inflation increased by 3.1% in November 2023 compared to 3.2% in October 23. US core CPI was also stable at 4%. US unemployment rate fell to 3.7% in November 23 from 3.9% in October 23, prompting talk of a soft landing where the economy continues to be stable while the inflation softens. The European Central Bank and the Bank of England also kept their policy benchmark rates unchanged. India's CPI inflation rose to a 3-month high of 5.6% year-on-year in November 23 from 4.9% in October 23, mainly because of volatile food prices. The US 10-year bond yield has fallen by 110 basis points from the 5% levels reached in late October 23. This has prompted a risk-on rally across global equity markets. Nifty continued to strengthen after the US Federal Reserve monetary policy, rising by 488 points or 2.3%. Over the last 30 days, Nifty is up 9%. The broader indices also did well, with both the BSE mid-cap and small-cap indices rising by about 2.5%. Among key sectoral performers, Nifty Realty rose by 4.6%. The surprise was Nifty IT Index, which rose by 2.5% on expectations of a stronger US economy. BSE Consumer Durables was the only sector with a decline of 0.4%. In select market movers, shares of HUDCO continued rising on momentum and were up 22% this week. The stock is up 51% from its OFS price over the last 2 months. NLC India said that it plans to expand its renewable capacity to 6 gigawatts from 1.4 gigawatts currently. The shares were up 13%. Shares of PI Industries declined 11.5% after a Chinese company announced plans to expand capacity and obtained registrations in key markets. Shares of Adani and Total Gas fell by 9.4%, most likely on profit booking, after the shares had rallied by 115% in the last 2 weeks. FIIs bought Rs 9,239 crores of Indian equities on Friday alone, taking their week-till-date purchase to 18,858 crores, one of the strongest buying weeks from FIIs in this calendar year. DII Activity, on the other hand, was mixed. DIIs were net sellers to the tune of Rs 2,600 crores this week. The US markets were strengthened by a dovish monetary policy. The S&P 500 was up 2.5% and the Nasdaq Composite was up 2.8%. Both the indices are now very close to their lifetime highs. In this section, we discuss select reports published by HDFC Securities research teams. Please note that these reports are available on our website. Star Cement is poised to achieve a robust 19% volume CAGR during FY23 to FY26. The company's overall EBITDA margin is also expected to improve to Rs 1,450 per metric ton by FY26. Hence, we maintain a buy rating with a target price of 190 rupees per share. We expect Birlasoft's growth momentum to accelerate, also accompanied by sustainable margin expansion. We expect an EPS CAGR of 21% over FY24 to FY26. We have upgraded our price target to Rs 800 per share. Our retail research team came out with a note on Phenolix Cables, India's largest manufacturer of electrical and telecom communication cables. The company has also forayed into the fast-growing electrical goods segment. The company's operations are backward integrated. Our team has a base case fair value of Rs 1,145 per share and a bull case fair value of Rs 1,220 per share. That is all for this week. Please refer to the detailed disclaimer on your screen. Please note that the securities discussed in the presentation were for education and information purposes only. Thank you.